What if the Federal Reserve's policy decisions stir up more than a ripple in our economic waters? Could they potentially cause a storm? Today, we delve into the world of finance, decoding the expectations and investment strategy of Alfonso Peccatiello. Peccatiello has an intriguing perspective on the Federal Reserve's future moves. He anticipates the Federal Reserve might make a policy error by signaling that higher interest rates, hovering around 4.5 to 4.75%, can persist for a more extended period. This scenario is not unfamiliar and harks back to the landscape of 2018. This prediction might initially drive bond yields higher, as markets are likely to buy into this soft landing narrative. However, it's crucial to remember that there's always more than meets the eye. Peccatiello believes that persistently higher rates will eventually trigger problems in areas like housing and commercial real estate. This, in turn, would force the Fed to cut rates aggressively in a repair cycle. Now let's consider Peccatiello's investment strategy in this landscape. Initially, he advocates shorting 30-year treasuries. This move is followed by rotating to short vulnerable stocks after the euphoria peaks. Furthermore, he proposes buying cheap options, betting on the fact that the Fed will need to cut rates robustly. The equity market euphoria around artificial intelligence and a soft landing is reaching extreme levels. This situation provides an eventual contrarian shorting signal. Peccatiello's Twitter polls showing excessive bullishness reinforce this viewpoint. Moving on to the realm of cryptocurrency, Bitcoin, Peccatiello has some predictions as well. He expects Bitcoin to rally to around $60,000 driven by euphoria before selling pressure kicks in. Historically, an easy Fed policy has been very positive for Bitcoin, and this scenario may well repeat itself. To sum up, Peccatiello's predictions signal a potential policy mistake by the Federal Reserve, leading to a rise in bond yields. He anticipates problems in housing and commercial real estate sectors due to persistently higher rates. His investment strategy involves shorting 30-year treasuries and vulnerable stocks, in addition to buying cheap options betting on a Fed rate cut. The euphoria around AI and a soft landing, coupled with his Bitcoin rally prediction, paints an intriguing picture of the financial landscape ahead. The potential impact of these predictions, if they come to pass, could lead to significant shifts in our economic landscape. As always, the world of finance remains a fascinating blend of predictions, strategies, and the ever-present element of surprise.